there are some people who are getting into entrepreneurship or new to entrepreneurship. What are some financial lessons that you find that these people in that state, new or growing just at early stages, what are some of the lessons we need to learn? Some principles we need to have?
The number one thing that I would tell anybody, if you do nothing else, the number one thing would be to separate your business finances from your
Mm,
personal finances. That might mean that you have two bank accounts, but you might not be there yet. It might just mean that you have two different Cash App accounts. One Cash App account takes all your business income, and the other Cash App account takes all your personal income. If you just separate your business from your personal finances, that will make your life a whole lot easier, because you'll be able to more easily assess how much money you're actually making.
it's good.
You'll also be able to separate your expenses. So if you know that you're making, let's say, $1,000 a month, right? But your expenses are coming out of your personal account, some are on your credit card, and some are from that same Cash App account. You might not recognize that your expenses are outpacing your income because it's all kind of going from all kinds of other places.
Absolutely.
In addition to that, when it comes to tax time and you now have to document a record of what you've made and what you've spent, now you have to go skipping and jumping, hopping, skipping and jumping through all these different places to figure out how much money you made and how much money you spent.
You got to go find that shoebox, right?
Correct. Correct.
Right.
You went to Walmart and you bought something at Walmart that was business, but you also bought apples, bananas, and pears for the house. If you separated your business and personal finances, you'd have two transactions. One transaction would be for all of your business expenses, and the other transaction would be for your personal expenses.
Yeah.
If everybody did just that, everything would be 1,000 times easier financially.
Okay, so I do need to ask you this question because this came up before. I'm looking at getting started in business, right?
Mm-hmm.
And what I find a lot of people do is okay, so can I start my business without having an LLC? Like, or do I
Yes.
need to go get an LLC? So talk to us about that because
You don't need an LLC. An LLC protects your liability. That doesn't establish whether you're in a business. If you get an LLC but you never actually make money or do anything with the LLC in terms of business, you don't have a business either.
right,
So the LLC is not what determines whether you have a business. The IRS actually says if you make more than $400, that means if somebody pays you more than $400 in pursuit of business, you could be cutting lawn, cutting hair, doing eyelashes, baking cakes, whatever it is that you're doing. If you've made more than $400, then you need to report that income. You need to report that as income on your tax return. That's what the IRS says.
see, I like that because I think this is my theory. Like a lot of people, they'll do all of this stuff. They'll go get a logo, get
Mhm.
a LLC, get a website, be on social media. But
Yeah.
what they're missing is that income piece,
You're
right?
not
They're
making
not
any money.
generating income. And I
Yeah.
think for some people, so watch the challenge might be okay, I go do all of this stuff, and then that thing that I set up, no one wants to buy it. And then I'm stuck
Right.
with it. And it's like,
Right.
what if you, and then what you're saying to us sounds like it's liberating. I I heard someone call hobby a business, but like I don't know what the correct term is. But you take the venture, you gain income, you see if there's viability,
Mhm.
and then you go register it. But to your point, even from day one, separating those things. How
Yes.
are people paying me? It goes into this bucket, right? Whether it's a
Yeah.
different bank account, and I pay out of that different bucket from my personal, and that can get us started. And we see, hey, this works. It doesn't work, and I don't
Yeah.
want to have a LLC for something that's probably very limiting in the name itself that I'm not going to do. So
Yes. That's exactly it. Just start.
yeah,
Just start and fine tune the details as you go along, but just start and determine whether you have a viable business that people are willing to pay for.
yeah. All right, Prudence, give us some more financial game. I know we should pay you for this, but we got you on the podcast and you're recording, so you might as well answer that, right? Like, what else? Give us
Right.
some financial tips for newbies, people who are just maybe we started making some money. What are some tips for us?
Okay. So now that you know exactly, now that you've separated your personal and business finances, the next thing you have to do is determine how much money you're actually bringing in and how much money you're actually spending. The fancy word for that in the accounting world is create a profit and loss statement, right? We could call it that, or we could say, write down on a piece of paper how much money you made every month, write down on a piece of paper how much money you spent every month, determine whether you've made a profit or a loss for the month. I think if people do that on a routine basis, you'll one begin to realize whether the business is viable or not, right? Or whether you need to make changes. Those changes could be that maybe you need to charge more. Those changes could be that maybe you need to spend less. It could go in either way. When you're ready to make investments in the business, so let's say you need to buy a new piece of equipment, you're able to look at the numbers and say, I started this business a year ago. Month 1, 2, 3, 4, 5, 6, 7, and 8, I didn't make any money, but now I want to make an investment. But because you are analyzing your numbers, as you begin to think about the investment, you will naturally also begin to think about whether that investment can make you more money. Will it make your life easier? Will it make more money? So creating those statements. The other bonus that happens with those statements is that the IRS only taxes you on your profit. So you will know your profit. If you only report your income, your tax debt will be much higher. And income could be even somebody with a 1099 is considered a business, right? So you're a consultant for a company, they give you a 1099. That's your income. You offset that income with your expenses. Difference between that is your profit and your loss. The IRS only taxes you on your profit. So if you're not keeping track of your expenses, you're paying more taxes than you need to.
That's good. That's good, Prudence. And there's a philosophy on money where I only look at my money when I have money, right? So if I think I'm not making enough money in my business, I don't look at it. I bury my head in the sand. How often should someone getting started, new into business, or even growing their business look at that profit and loss, the difference between their income and the expenses? How often should we look at that?
That's a depends question, right?
Okay.
If you're established, you should look at it at minimum once a quarter. And you need to look at it at minimum once a quarter because quarterly taxes might be due for you, right? So at minimum once a quarter. If you're starting out, you may need to look at it project by project. So you may need to say, okay, I am baking 10 cakes. And if I'm baking 10 cakes, the flour, the sugar, the baking soda, the salt, all of that cost me X number of dollars. And I'm going to sell it back for X number of dollars. And I spend this amount of time on it. How profitable is that project? So depending on where you are, you might need to look at it project by project. You might need to look at it week by week. Month by month is the ideal kind of sweet spot where you look at it and say, okay, this is how much I made this month. This is how much I spent this month. This month was profitable or this month was not. And sometimes it's not profitable, and sometimes not being profitable is a good thing because it's an active choice. When it becomes troublesome is when you think you're profitable and you're not.
That's good. That's good, Prudence.